How's it going, guys? Hope you're all well. In today's video I'm going to explain to you what is a balanced price range. Again, so a balanced price range is an ICT concept. It's one that you can use once you've seen, a run on buy stops, a run on sell stops. It's a really simple concept to learn, so without further ado, let's jump right into it. So first of all, as you can see, I've got a little diagram here, and basically what we are looking for is we are looking for a fair value gap on the leg down, which would be obviously the bearish leg, and then we're also looking for a fair value gap on the way up on the opposite side, which is obviously the bullish leg. So once we've identified our fair value gap on the bearish side and on the bullish side, what we want to do is we want to mark these out. So for example, there is a fair value gap right there, so if I just mark that out, so we've got an FVG right there on the bearish side, and we've also got a fair value gap here on the bullish side. What you would do then is you would obviously drag those out, and then what you can do is you can take the smallest of the fair value gaps, which would obviously give you then your balanced price range, and this is where you can go ahead and refine your entry. Instead of your entry being there, what you can then do is you can move your entry down, and what it also might allow you to do if you want to do this is also cover these lows. I know a lot of people obviously cover the low of the candle that does create the fair value gap, but it might also let you, give yourself a little bit of breathing room and cover these lows down here and still get in, your desired stop loss. So what I'll do now is I'll jump onto the charts and just show you kind of a couple of examples so you can see them, in the live markets when you're actually trading. So first up, we'll jump onto GBPUSD, which is a really nice example right here, and I'll zoom really far in just so you can see what's going on. So as I said before, you want to be seeing this kind of when your trade setup is setting up. So once you have seen a run on, in this example, it would be sell side liquidity. As you can see, this line is obviously sell side liquidity. We've had a run on this. What we've done then is we've come back up now. We've had a market structure shift, and now we would be looking for our entry. So what we've got is we've got a fair value gap on the bearish side. So we've got a fair value gap right there, and we've also got a fair value gap on the bullish side, which would be this one. And then as you can see, this has really refined where you can put your entry. In this example here, it doesn't really make much of a difference, because what you'd want to do is you would probably want to cover at least this low right here, giving you around a 4 pip stop loss, which is absolutely fine. And then obviously you could target wherever up here. So that's kind of what it would look like on this example on GBPUSD. Let's jump now onto EURUSD and just show you a quick example on this currency pair. As you can see, this is kind of a little bit different because we don't actually get a market structure shift, anywhere within this leg. What we do is we get a push up, a push down, and then we get a break here, giving us our market structure shift. As you will notice, there is a very subtle fair value gap on the bearish side, and there is also a fair value gap on the bullish side, and in this example right here, they are pretty much the same. So it doesn't make much difference in this example again, but what you can do is you can also use this to kind of refine where your entries would be. So if we go ahead and enter, you could probably put your stop loss below this low right here, 3 pip stop loss, very nice, and then you could target some sort of buy side liquidity right up there, and it would give you some nice risk to reward. So that's pretty much all there is to balanced price ranges, guys. It's a really simple concept to learn, but it's one that is nice to have in your arsenal to go ahead and utilize this when you're trading within the live markets. So if this video did help you out, please leave a like on today's video. If you've got any questions, as always, feel free to drop them in the comment section down below. And without further ado, guys, thank you very much for watching, and I will see you in the next one.